Welcome, everyone, to Doing Business with a Servant's Heart podcast, doing business and life with a purpose. Wait till you see the purpose today we're going to have from our guest. Serving others and achieving success is our goal. I'm your host, Steve Ramona. We created this show for you because we want everyone to learn how to do business and your life to make an impact in the world. I want you to think about how you serve today and what impact you'll create today. And my guest, I've been talking in the green room. What an impact. And financial money is always the emotional topic, but this guy has it down. Joe, welcome to the show.
Hey, thank you so much for having me, Steve.
So, what have you learned in finances and all the things you've learned in the last 20 years you've been in business?
That a lot of people do the right thing, they just do it the wrong way.
Explain that. What's the wrong way? I know
So,
it's a loaded question.
yeah. So, I mean, when I hear the right thing, meaning I want to protect my family, they usually buy a term life policy. I want to save for retirement, they usually have a 401k. They want to have long-term care for their families, they buy a standalone policy that's going to quadruple to 10 times in cost when they get older. And they think they're doing the right thing because they're finding cheap ways for them to cover these needs. But in reality, you know the old saying, you get what you pay for. What most of my clients do is they come to me in their 40s and 50s, even 60s, and say, Joe, I did this life insurance policy. Now it expired. Now I'm 100 pounds heavier. I had a heart attack. I'm on 4 different medications I wasn't on in my 30s when I bought this. I bought this long-term care policy in my 40s, and it was $100 a month. But Joe, now they want $1,700 a month. I can't afford it. And so, I had this 401k. I saved up over $1 million in it. But I didn't realize that I owe the government over $500,000 in taxes in this IRA or 401k. I thought that was my money. I didn't realize I was holding all this money for the government. My accountant told me to write it off so I could save $1,000. But now
Wow.
the $1,000 I saved for 30 years or 30 grand is now going to cost me 500. Why did my accountant tell me? So I have all these people come to me, and now again, you did the right thing. You saved for retirement. You got some protection for your family or yourself, right? You have some investments, so you have something to fall back on in case there's an opportunity in emergency. But you did it in a way that's high feed, illiquid, fully, downside if the market crashes, which a lot of people know from 2020 and 2008. So there is strategies where you could do the right thing, but you could do it in a way that's tax-free, liquid, can't lose, higher returns the S&P 500 historically, sue-proof, divorce-proof in some states. Having that type of asset will give you so much more opportunity to utilize that asset, especially in a down market, right? If the market crashes, you don't lose anything in this strategy. Now you're holding a bunch of cash.
Yeah.
So now you can buy whatever the heck you want at extreme discount when everybody else, they're not going to sell Apple at minus 40% to buy Tesla at minus 40%, or to sell Microsoft at minus 40% to buy real estate at minus 40%. It makes no sense.
Yeah.
So what my clients do is they say, okay, I got a big pile of cash. Well, if I don't need it, it's compounding and growing double digits historically, tax-free. And then if I need it, I can then leverage that to buy an asset at an extreme discount, wait for the market to come back and double my money within 36 months, like most of my clients did in 2009 and 2020.
Didn't affect the bottom line either. That's the whole thing. The bottom line is never affected. Tell us a story, a good story you have of this plan that you have and what
Yeah.
happened to the person, the final
So
result.
I had a client who owned 6 Harley Davidson dealerships back in 2009 and the beginning of '09, end of '08. And the market crashed, and he saw Harley Davidson stock go in the teens. And back then, I believe it was near 100, if not over $100 a share. And he's like, "There's no way me owning 6 Harley dealerships, knowing the margins, how much money he made, and there's no way that they should sell this stock so cheap." So what he did is he had a overfunded life insurance policy with me. At this point, it was through MetLife because I used to work there from '08 to 12. And so he called me up. He said, Joe, how much money do I got in my life insurance? I said, oh, you got about 250,000. He's like, all right, give it to me all. I said, whoa, are you sure? He said, dude, the stock is so undervalued right now. There's no way it's not going to go back to at least where it was. And if it does, I'll 10 times my money. I was like, oh,
Wow.
okay. So I sent him the 250, make a long story short, within 13 months, he turned 250 grand to $2.7 million. He put back the 250, he paid about 400,000 in capital gains tax, and he pocketed $1.6 million in 13, 14 months.
Not a bad payday for 13 months without
Well,
working.
and if he couldn't do that because banks weren't lending, he had millions in equity in all his buildings he had, all the Harley Davidsons in. Banks weren't giving him home equity lines, they weren't refinancing, they weren't giving loans. And so if he didn't have this strategy with the liquidity feature, he couldn't have taken advantage of something he felt in his soul, knowing his dad owned a business before him, his grandfather owned the business before that. So it was a Harley Davidson family for, a century. And he was like, I have to do this because I know in my bones that this is not right. The price of where it's at. He found a discrepancy, he exploited it, and he over 10 times his money in almost about a year and a month.
A great story. That leads to education and finance. I know it's important. How important is it that people be educated out there?
It is crazy. I have accountants who love my strategy, and I have accountants who hate my strategy. And I go to the accountants that hate my strategy to talk to clients. Oh, my accountant says, "What is a good idea?" I said, "Great, let's do a three-way phone call." So the accountant hops on. I'm like, "Why don't you like it?" He goes, "I don't understand it." I said, "So it's not that you don't like it. It's that you don't know enough about it to recommend it as a viable option for your clients." Is that what I'm hearing? Well, yeah, but I've heard bad things. I said, "So do you even know what my strategy is? You haven't even seen it. You hear a keyword, either annuity or life insurance. You don't understand there's hundreds of ways to leverage life insurance or annuities to save millions in taxes, to have liquidity, to make sure you can't lose, to preserve capital, to have a guaranteed income stream you and your wife can't outlive, or husband if you swing that way." So having that type of plan in place, the accountants don't really know, because that's not what their job is, to know what the newest product is, the newest strategy is. And their job is to save you as much money on taxes today. And in the long run, they will end up hurting you. Because what do you ask your accountant? How can I save the most money today? You don't ask them, what's the best strategy for me long term? You say, well, how can I save? So accountants say, well, just throw $50,000 in a SEP, max out your 401k. What's that going to do? That you'll save $5,000. And they're lying to their clients, because they're not saving that $5,000. They're deferring that $15,000, where we owe over $300 trillion in taxes as a country between debt, U.S. unfunded liabilities, Social Security, Medicare. So taxes in the 1980s here were 70%, not Canada, not Switzerland, here. And in the 1960s, they were over 90%. You can fact check me on everything. If you need proof, send me an email. I'll send you all the information you need that'll prove it beyond a reasonable doubt. Just go to government last 100 years.gov, highest marginal tax rates, or go to Google and type in picture of highest marginal tax rate 100 years, and it'll pop right up, first one. And so the accountants don't really understand what we do, and the ones that do refer me to all their.
Your secret sauce is the education, what I'm hearing from you.
You have to be comfortable with it. You can't have to say, oh, some random guy in Connecticut, because I'm nationwide. I have over 1,600 clients. I've done over $1 billion of protection and rollovers in my career. 5-star rated A+, 27 industry awards, blah, blah, blah. So the education of knowing what you're doing, why you're doing it, how it benefits you is vitally important. I had a referral that was referred to me from a very wealthy client. He said, well, if he's doing it, just set up whatever he did. I said, okay, but before, he's like, here's my money. I said, no. Well, what do you mean no? I said, you have to understand what we're doing before I'm just going to take your money. I'm not opening myself up for a lawsuit. Just because your friend who's worth $30 million and he's been working with me for 10 years, and you asked him, who do you know? And he referred me. You're not going to do it just because he said it's a good idea. You have to do it because you understand the liquidity feature, the free taxation feature, how the profits work. When can you pull your money? What protections do you have? What's the worst case? What if I lose my job? Can I lower my contributions? What if I get a raise? Can I put more in? It's not just oh, well, I heard it's a good strategy. I heard this video on TikTok about infinite banking or be your own bank. And the guy said it was really good. So let's just start it. It's like, no, we have to walk down this hill together. So you have information. So there's no, I didn't know this. You didn't tell me that. That's how I was able to maintain my 5-star rating and my A+ rating on the Better Business Bureau, by thoroughly explaining through my presentation, building a custom plan with you, emailing you everything, setting up a follow-up meeting so you can do your due diligence and fact check everything I'm saying is accurate. And then once you do, then you become my client because you understand the value of it, not because some random dude in Connecticut said this is where we should put all your money.
Yeah, that's a big red flag when you hear people say that. That's interesting. And what you're doing too is everybody's financial plan is different because of what the money they have, where they're at, how they work. I mean, there's a lot of variables involved in this.
You have risk tolerance, you have
Yeah.
age, you have plans. Do you want an income annuity? Do you want a growth annuity? When do you plan on pulling income? When do you plan on pulling Social Security? Do you have any other assets? Do you have real estate? Do you have rental income? Do you have debt? Is your kids going to college in 5 years? Is that going to add $250,000 of debt? Like these are all the questions we have to research, and we have to plan. Because if you fail to plan, your plan's to fail.
Yep.
Most clients, Americans, what I see doing is they have the blind dart throw approach. I have a 401k. I have a brokerage account through Robinhood. I did an Acorns thing. I have a credit card over here. I have a mortgage over there. I took out a second mortgage to do that. They have no budget. They have no direction. They're just flying by the seat of the pants. If they want it, they grant it. They're living pay. I've seen clients making $700,000 a year living paycheck to paycheck. And I'm sitting there like, what? You're in the top 0.00001. You make more than 330 million Americans make, and you're broke. And then I have clients who make $50,000 a year, and they're millionaires because they only live on 25 of it, and they put the other 25 away. Yeah. So it really comes down to ethics, morals, education, and do you participate in the debt society, or do you participate in your own growth financially? And some people are so tied up on instant gratification because we're brainwashed on it, right? If you want a house, what do? Mortgage. You're broke, you want to go to college? Take out some student loans. You're broke, you want a car? Here's a car note. You're broke, you want a TV? Here's a Best Buy credit card. We are always trained on, if you want something and you can't afford it, get it anyway and worry about it later. So it really comes down to your past self, your present self, and your future self. And what most people don't understand is that their future self comes quick. And if you have bad habits and you're doing things that aren't helping your future self, nobody but you is going to end up helping your future self. Nobody. So if you are doing habits that are so concerned about your present self that you're not putting any energy, any planning, any thought into your future self, the future is going to come. You're going to be totally unprepared. You're going to not have any retirement. You're going to be stuck in a nursing home under Title 19 with somebody who may or may not care about you, making $15 an hour and watching 20 other people at the same time. Maybe they just broke up with their boyfriend or girlfriend, right? So if you don't do these plannings, well, Joe, I'm a millionaire. Okay, well, what if one spouse needs care? Well, how much is it? It's $250,000 a year. Okay, I have that after tax, so it's $400,000 a year. What? I have to liquidate, pay the government half, which if it's $250,000 a year, that's going to jack up my tax bracket. So now I'm going to be in the highest tax bracket that year that me or my spouse needs care. And plus I have Social Security, and plus I most likely have a pension or some other form of revenue. That goes on top of that. So now that year that I had a stroke, that year I had rehabilitation, that year I had a heart attack, that year I can't take care of myself anymore. Medicare only covers the first 100 days. And then 100% of that is on you. And if you don't have a plan in place to deal with that, and you have the means and the resources to do it, one spouse is going to be healthy and like, oh, I still got 20 years to live. And one spouse is going to be unhealthy, and they're going to suck all the assets away from the healthy person who used to be a millionaire 5 years ago, which is now barely getting by without their spouse.
Yeah. That's amazing. It's a microwave world. Everything wants instantaneous. Let's get a little personal. Your last name's Lombardi, and we talked about this in the green room. So you're related to Vince Lombardi, the famous coach?
Yeah, apparently my grandfather was brothers with him. So and coincidentally enough, my great grandfather was, but my grandfather's name was Vincent Lombardi as well. And then my brother, who is now in Arizona, his name is Vince Lombardi too. So pretty funny. Yeah.
Wow. Yeah, and it's interesting because Vince Lombardi had a lot of quotes that would fit in the financial industry, doesn't he?
I read all his books and I live by all of his quotes. You know, if you're early, you're on time. If you're on time, you're late. If you're late, it's unacceptable. He has a ton of quotes that not only work for football, but they work for your success in business and
Yeah.
relationships and personal. I've been married for what, going on 20 years. I have 3 children. I met my wife when I was 18, been together, what, 22 years. It's a lot of the principles you learn, a lot of the morals and ethics that you have sort of dictate your future and what that looks like. And if you have poor morals, poor ethics, you're selfish, you only want to do for yourself, time's going to go by quick, your circle's going to shrivel down very small, and when you need something, no one's going to be there to help you.
Amen. That's a servant's heart. You take that away from yourself, you lose all that. And it's amazing. He's a 60s and 70s head coach to this day in 2024. It's still applicable to everything we do. And you had mentioned you were a football coach for minor league football. What did you learn and why did you coach?
So I had a really good client, and he was the head coach of a team called the Connecticut Bearcats. They were part of the New England Football League called the NEFL. And we had players from NFL teams on the practice squads, from the Kansas City Chiefs, the Jets, the Bills. And I was the assistant defensive coordinator. I was asked to coach with them. They're like, "Hey, do you coach?" I said, "Well, I would love to. I love sports. I watch sports. I played sports. I played basketball, football, track in high school. Yeah, let's do this." So, make a long story short, I come in there. It was a great culture. We had some really good players. We ended up winning 2 NFL championships back to back. That was with the Hairstons and Dom Calabito, and it was a lot of fun. We used to travel to New York, travel to Massachusetts, play 5-star football teams, and great experience. Getting to know the guys, helping them
Yeah.
train, learning the weakness, watching the games, watching the film. I was totally it's like having your own Madden team. So it was something that was a lot of fun
Yeah,
for me.
that's a great analogy. And it's interesting. I believe there's a bridge between sports and business. What do you feel sports can teach people that have a business?
So, well, to make a really rough, long story short, I got suspended from coaching town youth baseball in my own town for a year because there was 4 teams. This was coaching 8-year-olds in baseball, and we ended up winning the first playoff game. And I've been coaching for years: football, lacrosse, basketball, um, little league, and so ended up winning the game, going to the championship game, right? So ended up losing the championship game. Maybe it was 9 or 10-year-olds. Now that I'm thinking back. So I sat the kids down after we lost, and they brought out these huge trophies, right? This is probably in 2018, 2000, yeah, I think 2018. So my son would have been 8 or 9. So my oldest. So I sat the kids down. I said, "There's no way we deserve these trophies. We had a great year, but look at the winners' trophy." So on the first baseline, they lined up all the trophies. They were about, let's say, this tall. And then the losing trophies were 2 inches smaller. And I'm like, if it was like a ribbon or like a little, those little
Certificate.
metal,
Yeah. Yeah.
or something, I'm like, okay. But when they brought out trophies for the losing team, I said, "Kid, you don't deserve those trophies," right? I said, "They won, not you." And one of the kids, whose dad the week before, so it was the best coach this kid ever had. Swear to God, that's what he said. He walks out with his trophy, throws it in the garbage. And his dad was like, "What are you doing?" He goes, "Well, coach says we don't deserve the trophies." So he goes on Facebook. He's one of those bleeding heart liberals. And he goes, "This kid, this coach is the worst. His kids must be horrible, to have a dad like that." And mind you, this is coming from literally, I got the heartfelt, "Thank you. My son's improving so much. You're helping, him. This is the biggest growth I've seen in him since he started baseball 4 years ago,"
Wow.
yada, 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 yada. And then now he's going on Facebook blasting me. So the post was live for like, I don't know, 4 hours. There was like 600 comments.
Wow.
And like 60% of them is that I'm a scumbag. I'm an a-hole for, telling the kids they need to earn their trophies, not just be given trophies for losing. And the other parents, minority, of course, because everyone doesn't want to say anything, even though they may think it. They were like, "Oh, well, that's true. They shouldn't get trophies. That's not how we were raised, you know." And I just responded, "Listen, if there's a promotion and one person gets it out of two, and you don't get the promotion, you don't get 80% of the pay increase that guy got. You get nothing." So it should teach the children how to work harder to achieve a goal they want instead of just giving them what they want,
Yeah.
right? So I ended up going to the board of the town of the little league, and they're like, "Yeah, sorry, we got to suspend you for a year." And I'm like, "Okay." And I never coached little
I was gonna
league
say
in
you
the
probably
town.
never went back. You
Never.
learned your
I ended up
lesson.
going to all the other towns
Yeah.
and doing the group town coaching. I coached basketball in another town. I coached NFL Play 60 in another town. Did that for 8 years. But it's just sad when you're in these. I'm in a blue state. I'm in Connecticut. When you're in these type of you know echo chambers that the kids need zero pain, the kid needs zero growth, the kid's going to learn everything on their own in their time, and you're not teaching kids discipline, you're not teaching kids teamwork, you're not teaching children hard work. You wonder why they're going to stay in your basement till they're 40 years old playing Call of Duty and asking, "Hey, mom, are you making dinner again?" Like,
Yeah.
didn't they make a movie called The 40-Year-Old Virgin?
Yeah.
Right. So it's very sad that the most, or some, at least in my area, some to most parents are such coddling their children that you need pain to grow. A muscle is ripped to get bigger. You can't just say you're a good muscle, you love your muscle, and all of a sudden it's going to grow. And that's what a lot of people don't really understand. And that was, something that happened to me in my life. I would do it all over again because I always stand by my principles and my morals. But it sort of blackballed my family for a little bit. And then, of course, what happened a year later, like it always does, then it was popular that the kids don't deserve trophies.
Yeah.
Of course.
They
I
changed.
just was, I guess, behind the curve of people understanding what the hell.
Right. Yeah. You were just, well, you taught them a lesson. Unfortunately, you had to take the repercussions, which is sad. Well, we're getting to the end here. How can people get a hold of you? Because you gave us some great information. How can they find you? And you do a free assessment, I would assume, where people can check in and go, "Hey, I've got this situation I want you to look at."
I've been in business for 20 years. I've never charged a client $1. I never lost a client $1. I have one of my partners, Dennis Williams, who can do a budget for you for a fee, but he's amazing. He guarantees 10 times your money back in savings. I don't ever charge for my time. So you can go to www.ironhawkfinancial.com. I have published 3 books on Amazon, one called Being Your Own Bank. Another one is There's a Better Way Than a 401k. And the third one is Long-Term Care Without Long-Term Pain. For your listeners, Steve, I'm willing to offer those books for free to anybody that wants them. Just reach out to me at Joe@Ironhawk Financial. Just message free books. Heard you on the Steve Romana show, and I'll send you all 3 books PDF form, which are on Kindle. If you want to listen to audio, they're like $4.99. But for whatever reason you don't want to pay, which I don't need you to pay, I made them the cheapest they possibly can because I'm trying to get this information out as quick as possible. Just ask for the free books. I'll send them to you, no obligation. I won't hound you. I won't bother you. If you read them and want to work with me, just respond back and say, "Joe, read your books, want to set up a meeting." You can go to my website, www.ironhawkfinancial.com, fill out the contact us, give your name, your email and phone number, and I will reach out to you. And you can tell me, "Hey, I heard you on the Steve show, and I'm interested in some information." Yeah, and then you can look me up.
That's great.
Everything I'm telling you, look up, please.
Yeah. And I love that. See, he's backing up what he's saying. He's just not saying it, making you do it, or not making you, but telling you just do it my way. He wants you to follow up, and he's going to give you a free assessment and free books. I'll put that all in the show notes as well, so you have access to those books. I'm going to take advantage of that as well. And I want to thank you all. First, thank you, Joe, for being on the show. You're fantastic. I'm excited because there's some big things happening. And I want to thank you all for watching. He's giving you a lot of information. Watch the show or listen to the show and go forward and backwards and learn and understand some of these tips. So when you do reach out to him, you've got some of the knowledge and he can move faster with you and help you make more money. Don't forget about my TV show. Together We Serve. It's 2 p.m. Pacific and 5 p.m. Eastern every Friday. And we've got swag, doing business with Servant's Heart swag. If you reach out, I might send somebody a swag. If you reach out to Joe and help you out there, let's not forget, let's serve people and make an impact. We'll see you all on the next episode of Doing Business with a Servant's Heart.